Hey traders, Parker here with another market update or sector rotation update. And we can look right here. At the end of the video, I'm going to do some scans just to see what broke out for the end of the for this week and for this week for the range box. But for the most part, we're looking at the E-mini S&P 500s futures. You can see right here, broke out of this box right here, and it continued on up, created another box, and it broke out. What it actually hit what this was his previous box high right here, or this previous range high back here, and from there it actually turned around. This is my unbalanced percentage change indicator, and basically what I've done was take the formula for the unbalanced volume and change it to percentage change times volume, and that's basically what you're seeing right here. And you can see right here, volume is leaving, volume is leaving the stock. But we look down here at our volume levels. You can see this is a 2 times volume deviation to the sell side here as well. So there's really a lot of selling going on. I have this set for close to close. That's the trend or whatever. But for the most part, if I was to change this trend to the trend of the buy sell average or whatever, but you can see how it trended down as well. You can see how this candle right here should have changed. But for the most part, we can see how everything, you hit this consolidation area where the this previous range high was. You can see where the S&P 500 kind of consolidated right there, and this acted over resistance, because you can see right here became new support, and it actually broke down into that range. And then today or yesterday, it actually broke out of the range it had created, and it actually hit this gap. This pink little line that I made represents this gap, and that's this gap area. So if it can hold this area right here, it could probably shoot back up. But for the most part, if it can't hold this area, it probably would continue down further into this area and probably hit the bottom of this gap that's right there. So this is a gap in between it right there. So hit the top of the gap, but we get bad news on Monday. You could probably look for a further down move in the E-minis S&P 500. We can go to the weekly, and this is what it looks like on the weekly. The averages that I'm using on the weekly is 13. So if you're unfamiliar with this indicator, these dots represent squeezes, and the highest squeeze is the yellow one, then the one below that one's the cyan, this light blue color, and then a dark blue color. But for the most part, what causes the line to change, or the average to change color, is volume and price average, increasing or decreasing, and diverging. So for the most part, we can see volume is picking up, but it's picking up to the sell side. If you look at it like this, the 3-week period has not crossed below the 13-week period, so that's still a bullish sign, but we don't know. But for the most part, it's low volume. That's why it's dark red. This is my relative volume indicator. So relative to the past 12 bars, this is a dark red. So this is low volume. So we'll see. But with the unbalanced indicator, it's still showing bullish, and it's still above this momentum. If you don't know what momentum is, this I have it set to 13. So 13 bars ago, this is where the stock actually was. And that's all this indicator is showing you right here. It's above it where it was 13 bars ago, or still above. And this is what happened today on the 5-minute using using a range box. And there's the same indicator, and this is the volume as well. But for the most part, you can see it was really choppy this morning. You got this push up and then the push down. Stay within this area for consolidated in this area. Push back up, broke above the range, create this next range, and then pushed above and basically just traded within this range until the end of the day. And then it created this range. And you can see where I've added some features to the range box. So you can see the different fibs, and you can see where they are. And you can see this range represents from here, from the 21.4 fib to the bottom of the range represents $4.81. From the 38.2 fib to the 21.4 represents $3.78. And from the 50 to the 61.8 or 50 to the 38.6, it's $2.65. And from the 61.8 to the 78.6 is $3.78. And from the range high to the 78.6 is $4.81. And you can see that I balanced my range out versus what the original Fibonacci levels were. But this is what it looked like on the 5 minute, and this is what my 15 minute looked like. And that's basically how I played it on my 15. This was my area, but I really played the TQQ today. Once the Q's broke out, right here on this bar right here. And let's see if I can play the market a little long. Make money both sides, because if I'm not playing TQQ while the market is doing what it's doing, I'm playing SQQQ. And that's basically betting that the market is, tech sector is going down further. So let's go back to our daily, and let's go to the NQ. I have a lot of lines on the NQ. But for the most part, our NASDAQ is doing the same thing. It fell out of this range on a daily, and it may, I don't know. I don't see where, for the most part, because of these highs in this area, I would look for it to find support right here. Even though the range box didn't find something right there, because it's basically just trending up, and then it consolidated and stopped, and that's where the range. Anyway, for the most part, you can see the same situation here. It hit the top of this range. You can see where it's probably not going to show it on this one. I'm pretty sure it's on a weekly. But for the most part, it hit the top. This is where it decided to turn back around. It consolidated along this old range top right here for it, and then it finally broke down below there. And you can see right here with all these highs in this area, that's why I say it could look like a turnaround. And here we go right there. And this is what it looks like on a weekly. And you can see volume, unbalanced volume is still going up. But you can see the average is turning though. So we could get a further down move. And that's just how I track price and volume with the unbalanced volume indicator. If you're unfamiliar with that indicator, just look it up. But this is my modified version. I'm looking for a percentage change in volume versus just close minus previous close times volume. This is what the NASDAQ is doing. The same situation on daily. I already said that. So let's go here, and I'm going here because my sector rotation labels won't really act right on the futures. So with the sector rotation labels on, let those load up. So the sector rotation labels is telling you that energy looks like the best spot to be in right now. Utilities are red, staples, healthcare, real estate. S&P 500 is pulling back. Excuse me. And you can see for the change for the year, you can see the S&P 500 E-mini is up 12.45% for the year. Its 3-month average or its quarterly average is up 4.53%. and it's 1 month is down 5%, 5.5, 15%, and for this week from its open is down 2.34%. And you can see through all those labels the same situation. The only good thing is energy. There's a warning sign on the financials just because their 3 month average or its quarterly average is up, while it's 1 month, it's 1 week, and it's down on the year as well. Our offensive sector is trending down, and our defense sector is trending down as well. But for the most part, when we go through the different sectors, we'll be able to see that. And I want to see the quarterly ones as well. So we put the quarterly sector rotation labels on, and they're based off of week 13 week. Come on, man. So this is based off 13 weeks worth of data, and you can see energy is up. The dollar Dixie dollar within this within this 50. I need to change that. It shouldn't be 52 week. Yes, it should. So this is 52 week high and low, and its relative position within that. Same situation here with the. So I'm wrong on that. So it says 52 week high low. It should be 13 week high low. It's something I'm gonna have to go in there and change. But for the most part, it's still pointing towards energy on the quarterly that is still doing good. Utilities is still down. Precious metals, Bitcoin, staples, all these are doing bad on their quarterly levels or the 13 week range high and low. Their relative positions are low. So the S&P 500 between this quarterly is 51.1% on its 13 week high low range, while the energy is at 91.35 on its 13 week range. So energy is still where it's sector to be in. If we bring on the sector rotation indicator, just to get a visual representation of what's going on in those labels. 2. So this is what it looks like over the year. And if I wanted to see what it looked like on the quarterly, I would change it to 63. And we spread this out a bit, we can see energy is pushing up. And that's why I said this is the zero line. And this is my modified version. So this would be 0, this would be 50, and this would be roughly 100. This would be 0, this would be -50, and this is -100. But for the most part, you can see real estate, Bitcoin, all those things are below. The histogram actually represents the S&P 500, and you can see how it's so low. Even though it's pushed above on this, like I said, this is based off of 63 days worth of data, which gives me 3 months. But it's pushing back above. It was in a downtrend. This week it pushed above a little bit, or this day it pushed above a little bit. For the most part, on the E-mini S&P 500, that's what this histogram is. So you got technology down here, you got real estate, Bitcoin, gold, probably utilities. You can't see those other ones. What I'm gonna do is I'm gonna work on this. I'm gonna stretch this out, at least try and stretch it out, so we can see these labels a little bit better. So this is like a visual representation of what's going on in the market. It looks kind of crazy until you get to this end right here. So we're going to take that off, and we're going to go look around the sectors. So the first one we want to go to is XLE, which is the energy sector. And this is what I meant by within this. It looks great compared to the S&P 500. it looks great. It's still in an uptrend. While the E-mini is broken it. We zoom in, and it's actually trying to break out of this range, or actually broke out of this range here, broke out there, but it wasn't able to sustain the range right here. But for the most part, the unbalanced volume, same volume, is trending towards upward as well. I thought I already explained this indicator, but for the most part, this is your momentum line, this purple line. These dots represent the squeezes, same situation that's happening up here within on this averages right there. And this just gives you one sense of direction where the squeeze is taking place. And you can see where energy squeezed up there. And these dark blue dots are low squeezes. The light blue ones are medium squeeze, and you see a yellow one, it's a tight squeeze. And for the most part, this cloud represents 2 move averages. The top of this cloud represents 25% of the bottom move average, and I have this set for 21, so this would be 5, and this is 21. And you can see how it's trending up, and you got good volume in there. And we can go to the weekly. This is what it did today. It pushed up today, created this range, came back down and retested this range top right here, and then pushed back above, or continue to push up from there. And this is where energy is basically settled right here. So we can go to the weekly, and this is what we're looking at. So on the weekly, you got a square, and that square is in that body of the candle represents. There's a lot of volume, but there's not a lot of movement in the stock. So you can say it's throttling, something suppressing it or stopping it from moving higher. But for the most part, it's a red candle on the week. Do I have this close? Yeah. It's a red candle on the week, but for the but buying pressure, that's where you get this green cloak from, because buying pressure on this candle, the close higher than the half of the range between high and low. And if I were to change this, my trend to buy sell pressure, you'll get a green candle. And that's basically what those cloaks represents. So with my buy sell pressure trend, as long as the closing price is greater than half of the range of the candle, high and low range of the candle, then I consider that buying pressure, and I consider it bullish. Vice versa, if the closing price is below half of the range of the candle, I consider that bearish. But that's what that green cloak is showing you. But for the most part, when it comes to trend, I usually use close to close. And you can see right here on the weekly as well, it's breaking out or finding new momentum over our momentum line right here. And you can see the average cloud crossed over as well to bullish over here. And there it goes. So this will be 13 periods pushed forward, and energy's momentum is up. So it probably run into this these highs right here, and it may falter a little bit at 90, but it could push above right there as well. So that's XLE. So we go to XLK, this technology sector. And for the most part, this is what it looks like on a weekly. You can see our unbalanced volume line right here faltering. You can see the cloud and twisted over, but it hasn't crossed below this our momentum line. And it's also giving us a squeeze or a tighter squeeze right here. And you can see where it found support along this range high right here. And it may turn around, but if it falters below, it's probably going to hit this gap right there on the daily. I believe that's where that gap is coming from. So, yeah, this gap right here is where it may come down to and push back above. But it definitely lost its momentum on the unbalanced volume back here. What day is this? 7/25, so July 25th. You got a cross, and then you got your actual momentum cross on the August the 1st, where XLK started going down. So that's so we did XLK's technology and we did energy. The rest of them are looking pretty rough, to be honest with you. To go through the rest of them, I'll just pull it up over here in the index 2 and just let those come up. And we'll maximize this. And this is just a clean chart without any really a lot of my lines or my indicators on it. And it's just using the 63 quarterly move average. So the reason why I'm using 63, if you look at, there's only 252 days that the stock market is open. You multiply that by, if you look at it from 25%, you get 63. So that's why I'm looking at 63 minute quarterly average. And you can see in the S&P 500 just crossed below its quarterly average. The NASDAQ crossed below its quarterly average. The real estate crossed below its quarterly average. It tried to fight a little bit, but it's probably going to come back down here, or it might find support back from here. XLK, same situations below that. Well, we already looked at XLK. XLF, you can see how it's kind of trading within this triangle right here. Almost like a ascending triangle. But it's crossing below its quarterly average as well. XLB is the materials, and it just crossed below its quarterly average as well. So for the most part, I look at this coming probably back down here. At least retesting, because it broke these lows, so it might retest this low right here. But it's on this 50% fib as well. But all this is going down on low volume. So we come back to XLY. XLY is the consumer discretionary, and it broke below its 63. This is XLE. You can see where it's broke above its 63. It's still above it. XLU utilities still below it. XLV healthcare is holding above its 63, and it's in this somewhat triangle as well. XLP is consumer staples. It's well below it, and I would look for it's breaking below these lows right there. So it may come back in and retest these lows right here before it decides it. Depending on what the Fed says Monday or in September. And this is XLI Industrials. And they just hit their 63, the quarterly move average. And it has good volume. Excuse me. It has a lot of good volume right here. So let's go look at that XLI. So it's coming to the bottom of this range right here. It crossed below this range, right? This previous range top right there. And it's showing red on this one just because of the way I have the trend. It's close. So you got a square there too. And the momentum is looking good at all, especially when you come into here. So you got a slight push up, but not enough to overcome it. So we I don't know. So let's pull up our scan for where's the range breakup. I really don't want to look at the range breakup day. I want to look at the range breakup for the week. So what broke above this range this week? So CRKN has the most volume for its weekly break. And I'm looking at this on one bar, CRKN. This is a huge break. It actually broke on the day, it broke back here. Well, this is a reverse stock split. We're not finna really look at this. It's a reverse stock split, so I'm not interested in that. ADTX. I want to say it's the same situation. ADT, same situation. I don't think it's a stock split. Something else happened. This is a shooting star candle, so that's not a good candidate. HRB. Let me do something. Let me get rid of that and redo the scan. Because that's only going to give me stocks with 1 million in volume on the day. Versus when these stocks broke up. So this is what it gave me. Let me change my relative volume. I'll leave that alone. 21 day period. ETON. Shit. Once I looked at this one already. And it pulled back, but it's still a breakout for the week. And this week it did 4 million volume. That's not good. Prior week 15 million. This is not good candidates. So I'm going to forego the scan, and I did the market update, or did somewhat like a market update, and the demonstration of the power of the of this rangefinder indicator. And I'm doing some updates, and I previewed some of those updates already, especially one with the targeting system. But for the most part, this is going to be the end of the video. I'll do another video on the unbalanced percentage change indicator to explain, go into more depth, and the reason why it's significant over the regular unbalanced volume indicator or my other unbalanced volume indicator. But for the most part, this is the end of the video. I appreciate you guys taking the time out to listen to what I had to say. I wish you all the best and stay safe out there. Enjoy your weekend, and God bless you.